Welcome to another episode of The Dana Yee Show, and in this episode I'm going to briefly, I'll try to keep the rambling to a minimum, explain how tax brackets work. I know taxes may not be the most interesting thing in the world, but they're really important in life, and in my opinion they're more important than the Pythagorean theorem or other random stuff I learned in school that I definitely remember. As always, I put a lot of time and effort into my videos, so if you enjoy this video in particular, make sure to bop that like button and subscribe for all things money and finance. Firstly, a few assumptions to keep in mind to keep this as simple as possible. This will only be for federal income tax, which everyone in the United States, regardless of what state you live in, has to pay. There are other taxes such as state income tax, Medicare, and Social Security, but the federal income tax is like the most commonly talked about and applies to the most people. And it's also marginal and progressive, which I'll explain in a minute. The second thing to keep in mind is that the percentages and dollar amounts that I'll be using come from the 2020 tax year and apply to someone filing as a single filer. The numbers always change from year to year and it depends on your filing status, so if you're filing single, married, jointly, or whatever, but the idea is still the same. So here are the tax brackets for the 2020 tax year. So for example, there are 7 tax rates ranging from 10% up to 37%, and which bracket you're in depends on your taxable income. So if you made $5,000, you would land in this tax bracket. If you made $100,000, you would land here. And if you made like $520,000, you would end in the highest tax bracket of 37%. One misconception that I've seen people have about taxes is how the different brackets work. These tax rates aren't on your entire taxable income, if that makes sense. So for example, if you made $9,875, you would fall literally in the top end of the first bracket of 10%. So in this case, would you take a $1 raise to make your income $9,876? I've seen people say, no, why would you do that? Because then you'd be paying 12% on all your income. But that's not how tax brackets work. And long story short, only the $1 that's over the $9,875 threshold is taxed at 12%, while everything else is taxed at 10%. Now to explain why this is and more examples of how it works, we need to define two terms, marginal and progressive. Firstly, a progressive tax imposes a higher percentage on taxpayers who have higher income. As noted before, the higher your income, the higher the tax rate for that bracket. And this is different from other types of taxes such as regressive or flat taxes. Another important term to know is marginal. So the marginal tax rate is the tax rate paid on the next dollar of income. That might be confusing, so I'll give examples in a bit. The federal income tax is both progressive and marginal, which means that the higher amount that you earn, you have to pay a higher percentage of your income, and it's marginal because each bracket is taxed at a different rate. Now that's definitely a lot of words and a little bit confusing, and I always find I learn best with examples, so I'm going to do exactly that. Now because I don't have a calculator in front of me and didn't do any calculations beforehand, I'm going to be making up the brackets and the dollar amounts, but you can apply this to the actual dollars, but they're a little bit hard to do mental math on, so just bear with me. Firstly, I'm going to create fictitious tax brackets just to make my mental math a little bit easier, and we'll do the tax rates ranging from 10 to 50% and the income levels ranging from $10,000 to $50,000. And again, this is taxable income. Obviously, these are not the real numbers, but this is just going to make my math easier. The effect that marginal taxation has is that any money above $10,000 between $10,000 and $20,000 is taxed at 12%. However, the first $10,000 is taxed at 10%. I always like to use an analogy of buckets, so I'm going to draw a couple buckets, 30% and so on and so forth because I'm running out of space. Let's do an example of someone making $25,000 a year. How this works is that the first $10,000 is going to be taxed at 10%. So in this bucket, we have $10,000 and 10% of $10,000 is $1,000 in taxes. The next $10,000 that you make, so between 10 and 20, is taxed at 20%. In this bucket, we also have $10,000, which if it's taxed at 20%, is $2,000 of taxes on this like portion of your income. Now this accounts for $20,000 of this person's income, so we have $5,000 left that we put into the third bucket, 5,000, and 30% of 5,000 is I think 1,500. My math may be incorrect. Again, if we look at this, your first $10,000 is taxed at 10%. The second $10,000 is taxed at 20%. Anything that like flows into the next bucket is taxed at that rate. This doesn't mean that if you earn $25,000 and you're in this bracket basically, that you're taxed completely at 30%. It's not 25,000 times 30%, which would be, I think, $7,500. But it is, if we look at the calculations above, so it's $1,000 for the first $10,000 of income, plus $2,000 on your second $10,000 of income, and $1,500, oops, that's not the right way, plus $1,500 on the remaining $5,000. And if we add this together, that is $4,500 on taxes, I think. Math? Yeah. This is a roughly 18% of $25,000. This 18% here is what is your like effective tax rate. So you're essentially paying 18% of your total income, but because of the way tax brackets work, you're paying a different percentage on each portion of your income. Just because you fall in the 30% tax bracket, it does not mean you're paying 30% on your entire income. This is a misconception that I've seen a lot and can lead people to not take raises, which is definitely not what you want to do. Let's say you earn $19,999 a year, putting you in the very, very top end of the 10% bracket. Would you take the $1 raise to $20,000 if it means that it bumps you to the 20% tax bracket? Yes, because only the additional $1 is taxed at 20%, whereas everything beforehand is still taxed at 10%. Now this example is getting a bit long-winded and I feel like I rambled even though I really tried to keep things brief, but tax brackets can be a complicated thing, especially since most people never see this in school. So I hope you learned something and can apply this to your own life, and I'll see you guys soon.